is this interest rates showing up in the real world? Is this interest rates kind of showing that those early adopters for EVs have been and gone, and that the everyday person who's confronted with a choice to buy an electric vehicle is saying, not right now?
Is the market for electric vehicles stalling, Kevin, when sales are up as much as you say they are?
Yes and no.
All that and more. So let's get to it. Tesla stock is up in the pre-market, sitting at about 201.88 right now. If I had to guess, I would say the stock might trend on the negative side today. October was no friend to Tesla stock, down about 18%. When you add on the woes of September, the stock is down almost 25%. Year to date, though, we still have 70% gains. So the big question is, will Tesla continue to fall, where the next support would be somewhere around the 180 area, or possibly even the 150 area? Given the potential volume that this stock trades at, truly nothing would surprise me. But damned if I'll be able to predict it. I don't know which direction Tesla stock will head, but I know there's a few catalysts that are going to take place. The Cybertruck delivery event should be pretty magnificent, and there's no telling what new information that they plan to unveil at that event. Tesla's been pretty tight-lipped about future product, factory locations, and new technology revelations. So I'm always on the lookout for 4680 information and full self-driving talk. As artificial general intelligence ramps up from companies around the globe, I'm also interested in the supercomputer dojo, so any information about those three things could send the stock flying or tumbling, really. One thing I know for certain, it will be interesting to see where Tesla stock lands a year from today.
We're just talking about Apple being under pressure. Tesla's under a bit of pressure as well.
Yeah, on an extrapolated basis, I just glanced at my screen. I think it's up more than 1% in the session. But the point and what Bloomberg's writing about today is that since October 18th and kind of post-earnings, it's a stock that's down 20%. And, you know, something that the three of us have talked about a lot is this interest rates showing up in the real world? Is this interest rates kind of showing that those early adopters for EVs have been and gone, and that the everyday person who's confronted with a choice to buy an electric vehicle is saying, not right now? And, you know, broadly, that in line with demand is the question the market's posing right now.
This is nonsensical. If Tesla was making 6 million vehicles per year, this would be an interesting problem. That's about it. It would be interesting if Tesla was making 6 million vehicles worldwide. Instead, they're going to be making 1.8 million plus, half of which will be distributed around the world. So macroeconomic conditions worldwide are strenuous. I get that. But Tesla is at such low volumes, yet the most volume when it comes to EV production. And in the grand scheme of things, it's a tiny amount. EVs worldwide are less than 10%. At these levels, this is not a problem. There's still enough early adopters to continue to buy these vehicles. We're not in the volumes of opening up the total addressable market just yet.
But Tesla's still up more than 60% year to date when the S&P 500's up 9%, just saying.
Well, and I was going to say also, Tesla doesn't have the same kind of labor issues that, say, Ford, Stellantis, and GM do because of the UAW and having to increase worker pay in the same capacity. And as Brooke was talking about at the top of the hour, like, just because it's taking longer to get through a structural shift doesn't mean that structural shift isn't there.
Yeah, and, you know, the retail investors, those kind of Tesla diehards, you know.
You rang?
That are customers and holders of the stock are in full voice on social media right now saying, you know, this is just a 2-week period in time, you know, come back to me in a year and see how that looks. Yeah. And ultimately, at earnings, Tesla still reiterated guidance it will, you know, do 1.8 million vehicles this year. It's still the clear market incumbent. It's just that they used price cuts as a lever to unlock pockets of demand, and then Elon Musk really emphasized the rate environment as being the issue. So, you know, when does that stop being a problem?
It stops being a problem when the rates go down. Let's not make this harder than it really is. Those early adopters are thinking about an upgrade. Hardware stack 4. Man, mine only has hardware stack 3. I think I might want that hardware stack 4. You telling me they got a new camera suite on there? Well, that sounds nice. I think I'll get that upgrade. The Model S and the Model X are the lowest prices that they've ever been. I think I'll trade in my Model Y or Model 3. So to say that the early adoption phase is over is quite ridiculous, because if they're anything like me, there is no other electric vehicle company in your future. But don't get me wrong, opening up the total addressable market is in Tesla's plans. They're just not at the volumes right now. But something tells me the next generation vehicle will solve these issues.
More on the impact of the stalling EV market and whether it really is stalling. Let's bring in Kevin Roberts, Director of Industry Insights and Analytics at Car Gurus. Is the market for electric vehicles stalling, Kevin, when sales are up as much as you say they are?
Yes and no. So we're in a situation now where the data can basically tell you whatever story you're looking to tell. So EV sales are definitely up. However, not all EVs are selling at the same rate. So we're also seeing rising inventory levels out there, which is suggesting the market might not be as willing to buy every EV that's being produced right now.
Well, I suppose the consumer's not as dumb as some of these auto manufacturers hope they would be. With this high interest rate environment here in America, consumers are going to be less likely to pay for a premium EV that feels like an internal combustion engine, but has all the heartache of not owning a Tesla battery electric vehicle. Imagine that.
So the inventories are going up in part because I guess maybe some of the demand has come off, the froth in demand has come off, but also isn't it because the supply chain issues have been solved?
Yeah, so we're seeing rising new inventory across the board for all powertrain options. We're also seeing more EV makes and models available, which is also increasing that. And we're also coming from a really low base of EV inventory in 2022. So all of that is really helping to increase some of these percentage numbers that you're seeing.
On screen now, Ford Mustang Mach-E, Hyundai Ioniq 5, Volkswagen ID4, and the Kia EV6. And there's two ways you could take this. Well, there's no demand for battery electric vehicles, which is false. Or how you should take it, our battery electric vehicle right now is not appealing to those interested in buying battery electric vehicles. What must we do to attract those consumers and our current customer base? This is going to require some next level thinking. You can't just take an internal combustion engine frame and slap a damn battery underneath it. That appeals to no one.
Hey, Kevin, help us make some sense of this. On Tesla's call a couple weeks ago, we know that there's been these price decreases, and Elon and Cruz seems to think there's this price elasticity that should exist, and these cars are much cheaper, yet obviously financing costs are much higher. But even if you look year over year, with the price cuts, they're not that much more expensive with financing rates that much higher. What's going on with this whole idea that you lower prices a lot and there's still not increased demand as it relates to Tesla?
I just don't think we're there to price parity completely with internal combustion engines out there. Looking at average listing price data from Car Gurus, today, month end, October, average listing price of a new EV was 28% higher than an internal combustion engine vehicle. So there still is some pricing premium out there. And I think that's really giving consumers pause when looking towards EVs with some of the potential issues regarding charging availability and range anxiety.
When you look at, for example, the F-150 truck, the electric version of that truck is $8,000 or $10,000 more than the internal combustion version of it, right?
Yeah, so I was looking at the F-150 versus the F-150 Lightning today. So the F-150 internal combustion engine average listing price around $60,000. F-150 Lightning average listing price a little over $72,000. So if you put that into a month,
serious difference.
Yes, serious difference. And if you put that into a 60-month loan with a near 8% interest rate, just that MSRP difference could lead to a $250 increase in your monthly payment.
The Ford Lightning versus the Ford F-150. Now, this is just a lateral move from the F-150 to an electric version of the F-150. Yet you're going to pay a premium for a few electric vehicle features that might not be present on the F-150. An extra $250 on your monthly bill for the added headache of not owning a Tesla vehicle. You're talking about software, you're talking about charging infrastructure. You don't get any of those perks when you buy the F-150 Lightning, but you're going to pay a premium. You might as well buy the F-150.
Among the EV models that you see, which are the ones that are selling the slowest, where the inventory build is greatest? They're sitting on the lots longest. Tesla doesn't have that problem because they really sell direct to consumers. They don't have a lot of cars sitting on their lot.
Ding, 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 ding. Tell him what he's won, Johnny. Your mother right. This direct-to-consumer model is the reason why Legacy Auto isn't going to be able to compete with Tesla when it comes to pricing and reports of backed-up inventory. It is Tesla's objective to get the vehicles directly into the consumer's hands as fast as humanly possible, because a lot of the future products that are going to drive Tesla's revenues even higher require the cars to be on the roads, not sitting in some dealership.
Yeah, it's going to be an interesting case study of the retail sales model versus the direct-to-consumer model. There's definitely pros towards the retail model, and we'll see how that evolves into the marketplace. I think what the real kind of question now is, we saw automakers really moving quickly to get new EVs to marketplace, likely to parry Tesla's dominance in the market. But what we're seeing now is a lot of early adopters have likely adopted, and with that pricing parity still not there, we're likely seeing some hesitancy towards kind of mass adoption at this rate.
Interesting case study indeed. If done right, this is a very lucrative opportunity as the world seeks to transition from internal combustion engines. You reap what you sow, and if you sow you're going to reap In conclusion, the sky is falling. EV demand is vanishing as fast as the words can cross my lips. Panic sell your Tesla stock. Panic sell. A wise investor once told me, you need to be greedy when others are fearful and be fearful when others are greedy. With the stock looking like this, which camp are you in? That's all I have for you today. Be easy. Peace.